There are so many things people think of when they hear an interest rate hike. Mr. Mercer, what do you think are the main issues affecting people for the interest rate hike right now?
Well, certainly my area of expertise is looking at the housing market, and so obviously, if you think about people's monthly payments with the interest rate rising, that initially saw the average monthly payment associated with a home purchase increase quite dramatically as well as we move through the spring and the summer. It obviously impacts home sellers also in terms of if you look back to say February and March. When you're seeing the average selling price, at or even a little bit above $1.3 million versus where we are today at below 1.1, that's a substantial difference as well. As home prices have dropped to mitigate, higher monthly payments, and that's certainly one impact. If you look, more broadly, obviously it impacts people's ability to borrow money to purchase other goods and services,
or even, or not to interrupt, but or even to be accepted to borrow money, because for some, I hear what your point is that to borrow money, and the question is of how much they can borrow, right? What do they qualify for? But for those who were not in that bracket yet, for those who were even contemplating of maybe I want to borrow, maybe I can buy a home, like you said, whether it's detached, semi, sure, and so forth. This also affects them greatly because now with interest rates rising, banks are going to be a little bit more conservative and their approach on who they lend to and how much they lend to. No?
Yeah, well, certainly, as interest rates increase, it limits the amount that you can borrow, because obviously you'll have to be paying more back on the interest side of that loan. And even in the housing market, for example, on top of higher borrowing costs, we also still have mortgage borrowers having to qualify under the OSFI stress test. And so they'll take their contract rate. Let's say now it's 4.5%, and you're going to say you're going to have to be qualified at the higher of 2 percentage points over and above that 4.5 or the posted rate. And so not only are you paying on an actual basis because your contract rate is increased, you're also having to qualify at 2 percentage points higher.
Yes, I know. And for those who were hoping to wait, thinking it might be for their benefit, are now looking and saying like, oh, this might be to my detriment, actually, because now I may not qualify or I may not get something that I wanted. Do you think there was any form of lack of media follow-up? Because, media always reports about it, but I mean, there's never really a follow-up of like what it really does and impacts people and where it is right today. Throughout the summer, there was a huge talk about how the real estate market was going down, and possibly it was a correction, as many people had said, because, with the pandemic, there was a huge influx, right? But there's no media follow-up. What are your thoughts about that? Because I think a lot of people get their information from the media.
Well, I think one area that we've mentioned in our last couple monthly releases is around federal policymakers. So yes, if you think about CMHC and qualifications for mortgage insurance, and obviously that flows through to the Ministry of Finance as well. And if you think about the OSFI stress test, we haven't heard a lot from either the federal government or these agencies in terms of whether or not there'll be some flexibility as we move forward to account for higher borrowing costs. So OSFI, for example, we just talked about the 2 percentage point stress test. So as we continue to move through the interest rate cycle, does it make as much sense to stress test people at 200 basis points above their contract rate? It would be interesting to hear if moving forward there could be a little bit more flexibility about how that stress test is applied, especially as we move through the cycle. I mean, maybe it makes total sense to have a 2 percentage point test when borrowing costs are at or below 1%. Versus, when they're at the levels that we're experiencing right now, or even a little bit higher, with the notion being, how much higher do we expect interest rates to go? Does it make sense that we're still stress testing people at 2 percentage points higher? On the mortgage insurance front, do we want to start looking at, raising the ceiling for eligibility? I mean, right now in the GTA and other expensive markets like Vancouver, you don't qualify for mortgage insurance if the purchase price of your home is over $1 million. So that really precludes a lot of individuals from A, taking advantage of mortgage insurance, and B, being able to take advantage of the lower rates that are often associated with that.